All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for May 23rd, 2023. We'll start with the swing portfolio on 30 minutes, as per usual. Starting with Alcoa. Today it gapped down, rolled over, took the short with standard risk. It sold off, but then really didn't. It really didn't dramatically move south. So we just took 0.5 before the close. AI, we closed this trade that we started yesterday on the stop and reverse. The whole market started rolling over here, and that was a chance to pocket 2R. Notice how important the size of the risk box is in these cases, driven by statistics. Caterpillar, yesterday's SSC scratched. Yesterday we tried the SSC and scratched it. Today there was no follow through, no trade. CVS tried a COTA 2. It started off initially pretty good, got up to about 1.5. This was about plus 1.5 at that point. It failed, and then I had to get out at no lose plus dinner for 2. I gave it as long as I could. I was impressed with the rising lows that it had, and so maybe I stuck around long. Ordinarily, I would advise take it at the edge of the dragon, but I gave it a little more room. So as long as you don't lose money, it's a free lottery ticket. Dish, we initiated the COTA 2 supported fall crossing. That turned into the winter near the end of the day, and on that basis, I decided to keep it. We're at +1, and this thing has cleared that resistance. It has to get to the 5-day low tomorrow. If it gets below 650, then I'll add a second position to the downside, and then we're looking for a return to about 615. Devon Energy, we initiated the supported fall crossing. It's holding about +1. Electronic Arts, no trade, but I think I missed the COTA 2 in the afternoon. Emerging markets, this one was sweet. This was a big gap down to here. It tried to recover and then stabilized and then started to fail, made a new low of the day. And the fall turned to winter. So we put the short on. And that thing just collapsed and closed weekly, and that's holding +3. And then tomorrow, the 10-day low is in play. If it continues to fail, I'm looking to add a second position somewhere in this region. That one looks promising. ETHE, no trade. Mexico, yesterday's scratch, right? And then we missed the continuation to the downside. Today, it tried to recover and then failed, and then on the breakthrough here, as you were. That was a stop and reverse. I'm thinking, man, I thought I did a lot better on that. Yeah. So this one was a sell-off, then this was the long, and then it came back to here, and then we stopped and reversed, and yesterday it closed poorly. Today it continued down, and then on the refailure, added the second position. I'm thinking, man, I thought I did better than that. And it turns out we did. So that is 1, 2, 3, 4, 5, 6, 7, 8. So this one is holding about +8. This one is holding about +2. So we're about 10 to the good on that one on 2 positions. And if it fails below here, be 58.86 is the 30-day low. So this thing, and it just getting ready to roll into the winter. So this is early days on that pain and suffering. Brazil short one at the PSAR flip, and then I got out of that one because Mexico was working much, much better. Intel, yesterday's caught a 2. We basically got out of that with a scratch. IP, no trade. IYR initiated the short on the supported fall crossing. KRE, we had a position held over from yesterday's COTA 2, which closed well, and then today it gapped up to here and then kept going, so added a second position, watched it make a new 10-day high. Then the whole market started getting wonky, so we exited that one here all out, and that one is about +2. Nope, no reason to not take a trade. I have to have a powerful reason to take a trade. Let me go back and look at it. And plus, I mean, I would probably span of control more than anything. And plus, this thing is, the 30-minute bars are so violent and large, and then the risk box is actually, pretty small. That's not really a lot. I mean, that's tradable for sure. But there were a bunch of other things that I felt were in a lot better shape, and I have become a little disenfranchised with IP. When I look on the back, it feels just like it's in a sideways chop, and the easier money's gone. So I'm getting ready to replace it with Microsoft once I total up all the trades of the last 3. Anyway, back to KRE. So that one was, we put the second position on, that rolled over. I took the exit. That's about 1, 2, 3, about 3R. McDonald's took the intraday short. That was a continuation from yesterday's short. When it came back and hit the edge of the dragon, I decided to take the +1 and call it a day. Took the intraday exit today on MRK. So MRK, Merck, we took the supported fall crossing entry yesterday. It gapped down and then started slowly working its way back, so we got out of that with about +3. I missed the short. There was also a stop and reverse available I had no interest in, but I missed the short. That could be ready if it breaks below the 10-day low tomorrow. That's a good candidate for short. Yeah, I keep threatening IP to try to make it move. It doesn't seem to be working. Marijuana. I tried the long and stuck around too long and got burned for half an hour, lost it. Just sloppy, span of control. PBW, I tried the continuation trade here. It ran up nicely. I gave it as much room as I could to get out with a no lose plus dinner for 2. It continued to fail through the PSAR, so I took the short. It didn't really fail through this support level, and then when it came back and hit the edge of the dragon, I just took a no lose plus dinner for 2 and felt like I squandered some opportunity in there, but that's just what was there. Rivian, no trade. Missed the short. There was a nice a 1, 2, 3 entry here. On a better day, I probably would have taken that one and tried to scratch, but there was a tradable move in here. Just missed it. The S&P, if you're a market trader, boy, with this one sure paid off. Here's your OR3. There's your short. Smash. Treasuries, against my better judgment, took the SSC after that long, horrible slide. That just feels like an orderly sell-off that bottomed out here, and PSAR flipped there, and we're right around a key level of 100. So why not? Give it a try. Round numbers. Tesla, so we had a 3-position play in this one. We started off one back here on the 17th, and that closed pretty well. And then yesterday we added on the emerging dragon entry, and that closed well. It was closing well, so we added a 3rd position, closed well. It gapped down to here, rode up, rolled over, and I felt lucky to get out here. And that one was 1, 2, 3, 4, 5 on the first one, 3 on the second one, 1 on the third one, so about 9. U.S. Steel took the collapsing dragon here on this long slide, and that collapsing dragon broke, sold off, then monkeyed around, and it didn't sell off like I wanted it to, and it felt like that may be the move tomorrow, so just get out of it with a scratch. Looking for the sniper trade of the day here. Stand by. Here's your OR3. This sets up your OR3 entry. Sorry, just a minute. That would be your mechanical entries off the OR3. So we're short on the fourth bar. We take a half an hour gain after the rebound off the half an hour rebound off of the reversal of the RL10. SSC entry about 0.3 on the gain. Kata 2 re-entry about +1 on a exit at the edge of the dragon. Short on the PSAR flip for a no lose. Kata 2 re-entry, micro loss, stop and reverse at the PSAR flip. Half an hour, just take a break. SSC, half an hour. Collapsing dragon, R. Collapsing dragon, R. So that was a grind, and I was waiting for a little more confirmation. Once this whole pile in here started kind of grinding, I started taking that extra pause to let it fully develop the collapsing dragon rather than the pocket entries, because they weren't paying off as much. So that's probably +3 for the day on that. That was a grind. Traders trading. So let's see. Steve is working a trade frame here. This is a weekly chart on fetch.ai. He's looking for this particular frame, and he's realizing he's got a move to there and a move to there if those breakouts work. So this turns out to be that perfect fence sitter type of a move, and you can see that when it hit that level before, there was a strong move up, a strong move down, huge move up, huge move up, nice move down. So there's every reason to believe that this is a key price level. around 25 cents. And it wouldn't be surprising to see a big move. The downward move is probably suggested here. So that's the frame he's looking at. If you zoom in on that thing, that's again a fence sitter, perfectly postured, culminating in the tiniest little doji. This is the equivalent of that strategy of maximum pain and then range compression, which goes from maximum fear to indifference or the tension that's compressed into this tiny little box. And then the breakout could be large. As you see, this thing tends to move sharply once you get a whiff of momentum. That's some manic depressive buyers and sellers in there. So now he's zoomed in on the daily on this one. Same one, but now drilled down to the daily. And he's noticing the size of those daily moves, legs 1 and 2. And he's using that to determine the size of the move that comes out of the breakout box. And that's anchored in observable support and resistance levels. You know, those are clear turning points at that price level. Like, it would take something to get through there for sure. You might even start seeing some resistance at this level, especially if you're able to get a good entry and it gets to here and then starts to stall. That's where the 2R battle drill gets invoked, even though it's actually much better than 2. You're already up around 4 to 5. That's about a 5R move to here. So if this thing starts rolling over here, that should tell you. And then it feels like the downward move would be large. Peter. So each one teach one. He was explaining how to do this to other traders, which makes you a better trader yourself. Here's the gap down, morning hook, 1, 2, 3 entry, tight wrist box, rolls, puts the second position on, quick exit, nets 1. You know, I like that, but I like this re-entry better. Then when the VWAP fails over in here, that's an alert that the upside regime is over, and maybe it's a downward move, and so you might see this as a collapsing dragon, and certainly by here, a collapsing dragon. So you don't have to trigger on the VWAP, but you should use that to decide directional bias. Hamad, let's see where we're at here. Tries the short, takes the exit, it fails again immediately, so now he just takes the same trade, and a nice exit at the edge of the river. Beauty 1.3 versus minus 1, so net 0.9. Okay. Brazil, sweet. So when I'm not saying he's wrong. What I'm saying is when he's not aligned, he's small. Stop and reverse at the usual signal, PSR flip, same wrist box, Hulk smash right at the edge of the dragon. Nice. Net 2. Notice that these are happening right after the Z3 pinch. And so as we briefed yesterday and the day before, if you take that pinch to be the key price level, that is and you see that Z3 line starting to expand. That is the beginning of trending behavior. When it doesn't work, what you see this as really is a fake one go to, and he gets the fat part of that curve. So that quick reversal is what sets that up. And notice by this time, the dragon has already rolled over and starting to roll up. As you can see, the river starting to roll up. So this is looking a lot like an owl style of an entry. This is the marijuana futures. PSAR breakout, tailing off. I might have exited a bar earlier. That's still pretty good for 0.8. Yeah, this looks like the OR3 breakout. Micro, PSAR flip, Hulk smash for the second entry on the collapsing dragon. Very good patience here. Good exit, good effort. So 0.1 minus 0.1, those two scratch. 1.3 and what, so net 1.4. And this is where the kata challenge is an excellent discipline with Griff. And discovering the time frame that works for you, that allows you to minimize the cognitive load of the decisions that you make. There's plenty of movements on the 10 and the 30 minutes to get reliable rewards. And if slowing it down to that level allows you to manage your emotional state and do the span of control work that you want to do, so be it. My brother on this is lemonade, that cool, refreshing drink. And we talked about this one yesterday, and this is the continuation pattern. And quick exit, nice re-entry, 2-hour battle drill, and get out. So 2.4 when he's on the trade, minus 0.8 when he's off the trade. So that's a 1-to-3 ratio in terms of size of rewards. Stays out of the chop, waits for the PSAR to flip, gets the entry, gets a 2-hour battle drill, 4-hour battle drill, and everything out for 9R for the day. And then this is the tactical trade. And then the next one shows that when he looks at his 3-day swing trade, that thing is still in play. You can actually just use that money to fund the overnight risk on the swing trade, which is looking like this. He's still got an entry on that one from, let's see, from right in here. And I'm presuming his exit is probably about here. I might even suggest that he just bring that up to 17, and then that way he's locked in. If you feel like it, brother, you could do that. You
I
could
have
do that.
I have a $1.40 trailing stop because lemonade is $1.42 range stop. So.
Yeah, so that's at 18 right there. So minus $1.40 is about probably 1660. So his 1660 exit is probably just under his entry.
Yep.
I might just do that and then leave that in place until this thing picks up and goes.
Yep.
And if it makes a new high, then you just pick up the trailing stop. Otherwise, the difference
Yeah.
in the long run is peace of mind.
Yeah. It's 2 days in. I'm up 7.6%. So
Yeah, why
it's
not?
really early after something that's been gone for or going down
Yeah,
for 18 months.
yeah,
The other one I wanted to show folks is that Zion. I think the stealth trade right now is, or if I'm a big reversion to mean guy, either way, Zion it's just, yeah, but if you look at it on
3-day.
yeah, it's coming back nice. Even on the daily.
Yeah.
I looked at it on the daily. Is what it's even better. Yeah.
Yeah, beauty.
So
The only thing I'd say on that one is that you can start looking at how much it's given back after those peaks.
yeah,
It's starting to give back more than it gained.
yeah,
And so and this is coming right into all of this. So
absolutely.
so
Yep,
when you frame the channel, that looks like, if you say that's the top of the channel, that's the bottom of the channel, and then you
yep,
say, here's a reasonable entry with a reasonable risk, and then I have two rewards to the top, and then there's a lot of this chop that it's got to get through. Now, if it gets through this, that's
yeah.
really
That
a strong
33.
sign. But the only thing I'm concerned about there is that today it was the first test of that, and it got punched in the face. So it looks to me like a bunch of the folks that had this saw that as a rejection, and that's your first bailing. Now, if this
Could
continues
be.
tomorrow, there's another nice play, but I wouldn't stick around longer than 28 if I owned that one.
Yeah, my in on the 3-day chart is going to be 33.
Yeah.
That's where I think the PSAR will flip.
Yeah,
Uh,
because by that time
yeah,
you've cleared 32, you're entering around 33, and then you have a nice 10%
yeah. If
stop
you
or
go
something like
see
that,
that
and then
back
you
there
go.
in March, it's at
Yep.
33 something. So
Yep. Yep. I'm with you on that.
those are my thoughts. Yep.
Mm-hmm. Yeah, that looks good.
But yeah, take a look at the banks, guys. I mean, the ones that got smashed, they're gonna somebody's gonna stealthily make money, and why
KRE.
not? Yeah, yeah. KRE, the banks are gonna do it. So
All right. Let's head to the. Let's see. Let's try and get the daily report up here. All right, back to the daily report. Still bull quiet. A little bit of pain and suffering as we slide a little bit here on today's sell-off. This is getting ready for. We're going to get a volatility break here pretty soon. That's all I can say. IEV signaling a buy on dip. Widespread weakness in the large caps here. Disney, Coke, and McDonald's. So that's some of your staples right there. That's a little concerning. So we should be seeing weakness in the Dow. Procter and Travelers. That's not a good sign. And there's that continued weakness in Merck. Not a big fan of that. And a handful of auto framers that test well. For the venturists, that Disney, that's bottom feeding catfishing right there. In the ETFs, handful of auto framers. Only weakness today in Euroasia, Mexico, materials, staples. So that's troublesome. Lots of auto framers. No squeezes because today's range was actually pretty large. A lot of Godzillas in the S&P 500. There's only two that had 1 day enragements. I think that's Corning, and that is General Dynamics. PayPal in the tactical set, and then you have, I think that's telecom or home builders, ag products, and then Japan value. Everything quiet, ready for that first volatility move out of the gate. Yeah, even the 1 day movers Having that as the highest Z-score of the movers is kind of a tame day, but notice Pfizer has the most weakness. And there's some opportunities in there. Eli Lilly, so looking, the farms are getting kind of weak. Let's see. So we've got this sorted by percent change. So the negative volatility here, the increased volatility was the bigger play. That's a sign of maybe a shift. Only a handful of things in the green today. The market was off 1.12. U.S. Steel and Cliff in the metals. Alcoa very weak today. That's a candidate for short tomorrow. And then Intel, Nvidia, and Texas Instruments all in the red. But when Intel and Nvidia are both down large, and Tesla's down large, there's some tech leadership getting slaughtered right now. That's not promising. So I would be very cautious with tomorrow. And we're starting to see an increase in the winters. And yeah, that's not healthy. And when you see the ones that were in the summer, I mean, this is where, you know, that price is a leading indicator. Is the only things in the summer on the ETFs: tech, Brazil, the Russell, and the S&P, and these were all among the biggest losers today. So when you take even the winners are losing, then that tells you all these other ones are failing even faster, and the last little bit of support could be at risk. That's my concern right now. Yeah, broad-based weakness across the board. Yeah, this sideways grind feels a lot like this one. And so if that ain't working, a move back here to 405 is possible. So if it leaves the river, look out below, because then it's down to 390. And we could be back inside this chop quick, fast, and in a hurry. This is as critical a state at the zero line for the Z-score as you want. So notice that the slope of the RL90 has almost like a Kata 2 shape to it. Like we would have wanted this thing to be moving that way, but it's already starting to roll over. And the RL30 slope, which peaked right here, which is why we pay attention when it comes out of the plus or minus 1 Z-score and then rolls over, that's usually not a good sign. And this is ready to collapse. And then if you look at the slope of the RL10, I mean, that thing had been getting this high. This time it's already rolling over here. So everything has this kind of depressive rollover feel to it, which means it could come back to the lower limits of that channel under normal conditions, which would bring it back to here, below 400. So this is a cause for some concern. You know, on the longer term basis, we still have rising lows, sure. But remember, that's a move back to 400. Like this upside move isn't done and dead officially until it breaks below 400. But if it breaks below 400, you know, you hope that it finds some support on this level above 380. And if that fails, then you're right back at 360, and then all the hard work here goes for naught. Because when this thing fails, it can fail fast. So, word to the wise. Know your stops. All right, that's everything we got for today. We'll get this published and posted and see you guys tomorrow. Let's get them.